Hi, everyone. It's Christine Kopr, Senior VP of Sales with Sotheby's International Realty Canada, and this is your August market update. We're going to take a look at the most recent stats that came out now that July's over, all the data is in, and we're going to see how the market is doing. Let's take a look. As you all know, every month I like to take a look at the overall stats to see how the market is doing because it's a very clear indicator of which way prices are going to go. Supply and demand is the basics here. And if you recall, a balanced market is between 4 and 6 months of inventory. Anything above 6 months of inventory is considered a buyer's market. It means that there is more inventory than there is demand for that product. And of course, when there's more inventory, less demand, prices start to soften. It's considered a buyer's market. When we have 4 months or below of inventory, so not a lot of inventory, but a ton of demand, that is considered a seller's market because there's just not enough inventory to meet the demand, and therefore prices start to move upward. So we're going to take a look at the overall market here from the context of sales, how much inventory is around, and how that translates into months of inventory. So for July, the Real Estate Board of Greater Vancouver reported 2,455 sales. That is down about 18% month over month, but it's also up 29% year over year. So if you recall, last spring, the March, April was the peak of the market in 2022, and that was before the interest rates started to really go up several times since last year. So we had a lot of interest rate increases since last year, and of course that has impacted the market. Things started to slow down in the spring, summer, and definitely the fall of 2022. So when we're looking back year over year, we're looking at how did we do in July, which the slowdown had already begun, with the peak being earlier in the spring of last year. So sales down a little bit month over month, kind of common for summertime. People are off on holidays. Year over year, we're up 30%. We're coming off a low point. However, it still shows that the market was recovering since last year. And to put it all into context, because obviously we're going through a very unique time in our financial history, our sales were 16% below the 10-year average. So not the typical, but doing better than they were last year. And of course, we've definitely had a lot of a recovery earlier this spring. We've got just under 2,500 in terms of sales. So that's the amount of demand and the volume in the marketplace. Then we need to look at, well, how many new listings came on that month? How much more inventory came on? And we had 4,649 new homes come on the market. That was down 14% from the month previous. As we're heading into summer, that is very typical. And then we're also up 17% year over year, which in the context of last year, not a ton of listings were coming on last year. And with respect to the 10-year average, to see how this is, overall, when you take out the highs and lows through these market cycles, we're just 5% below the 10-year average in terms of listings. Now, the reason we look at new listings is to see how much more inventory is coming on each month, to see, are we going to get this flood of inventory coming on because of whatever's happening in the economy? So we always want to keep an eye out on that. Then we take a look at the total active listings. So this is how many listings were left unsold at the end of August. Obviously, we need to have some inventory so that people have something to buy. What we want to see is inventory not growing to some large amount where we have a lot more inventory than there is demand. And then obviously that affects the months of inventory and will give us the gauge of where the market is heading. So we're currently sitting at 10,300 active listings on the Real Estate Board of Greater Vancouver. Now remember, this covers everywhere from Whistler all the way to Maple Ridge. Okay, so we're taking a look at the broad market perspective here just to give you an idea of where things are headed. If you have a certain type of product, price point, neighborhood, and you want to know this information about that, please contact us so we can give you a proper specific overview of your market product. So we're sitting at 10,300 active listings on the Real Estate Board of Greater Vancouver, which is up about 3% month over month, down 4% year over year. Pretty interesting. So things are tightening up in terms of total inventory for comparing to July of last year, when we came off of the peak and interest rates were being increased every month, basically. And in terms of the total amount of inventory, we're about 14% below the 10-year average. So we are still sitting in what you'd consider an overall listing shortage comparatively to our regular average marketplace. So where does that put us with months of inventory? Well, we're currently sitting at 4.2 months of inventory. And if you recall, 4 months and below is a seller's market. Between 4 and 6 months of inventory is considered a balanced market. Now, balanced markets are market conditions that neither favor the buyer or the seller, and they are fleeting. They tend to change very quickly. We tend to either be in one extreme or the other, as is in usual marketplace. So we're sitting at 4.2 months of inventory, just on the cusp of the seller's market, heading into more of a balanced market. And with the trend, which tends to be our friend. If we take a look at where we're at, you can see earlier this year when we came out of the winter months, we had 7.3 months of inventory in January. That was a heavy buyer's market. And very quickly into February, we dropped down to 4.4 months of inventory, which was a balanced market sitting on the cusp of a seller's market. And then the rest of the spring market has been a serious seller's market. Multiple offers have been very common everywhere. And as we're heading into the summer, things tend to soften up traditionally because most people want to take some time off and take a break from real estate. And so things start to slow down in terms of volumes of sale. So it's not uncommon to see a little bit of an uptick in inventory. However, we did see 2 interest rate increases, 1 quarter point increase in June and another quarter point increase in July. So this could also be impacting the market somewhat. It's going to be interesting to see what happens in September. When is the next Bank of Canada interest rate announcement? So we're sitting at 4.2 months of inventory. We're going to see what happens in September. I can tell you that for certain product types, it is still a very competitive marketplace. For example, in the Tri-Cities, if you're looking for a detached entry-level home around the $1.5 million price point, you're still seeing multiple offers. They're very common, so there's still a demand despite higher interest rates than what most people in the near term have been used to. So price point wise, where's the benchmark price today? Well, we're sitting at 1.21 million for the benchmark price for the Real Estate Board of Greater Vancouver. That's up just 0.58%, so under just about a half a point up month over month. And we're also up a quarter point year over year. So there's been a bit of an increase year over year. We're still not quite at the peak of where things were at, but we definitely have had a very strong recovery with continuing price increases. And if we drill down and take a look at where we're at in terms of Metro Vancouver detached homes, townhomes, and condos, you can see for detached homes back in July, we had 681 sales for July. That was down about 20% month over month, just like the rest of the overall market. Sales were up 29% year over year. The benchmark price is sitting at 2 million, just over 2 million. And the benchmark at the peak, which was about March of last year, was sitting at 2.1. So month over month, we've had a price appreciation of 1.1% and year over year is 0.6% increase in terms of your benchmark price. Detached homes, there's a lot of skewing in terms of the pricing because you get a very large price points over on the west side versus the east side in Vancouver. And then of course, as you move out into the suburbs, but you can see that we've had a very good recovery in some markets. Some prices are where they were at the peak and in some case higher than they were at the peak. And this does include some detached homes. And some are well below, like in the Fraser Valley. So again, this is the broad market, just giving you an idea of where things are at. Attached homes, so townhomes, we did 466 sales. That's down 15% month over month, but up 53% year over year. So again, a very strong recovery in that missing middle market. You're looking at 1.1 for a benchmark price for your townhouses, coming off of 1.150. So just 50 grand below where things were at the peak. And we're up 0.5% month over month and 1.2% year over year. With attached condos, we did 1,281 sales. That was down again, just under 20% month over month, up 21% year over year. And you're sitting at 771,000 for your benchmark condo, just down from 844 at the peak. And then Today's price point is up 0.6% month over month and up 2.6% year over year. So you can see again a steady increase, things coming back from where they were. And like I said, this is a very broad market overview of what your detached homes or different product types are sitting at. Every market is different. Like I said, in some cases, prices are back to where they were and even higher. Some cases they're lower, but they are making a pretty steady catch up from where they were. The point is if you're in the market in terms of your net worth, it's getting better if you only entered the market in the last year or two. I've been happy to be able to report to some of my clients that recently purchased in the last couple of years since all of the interest rate increases. They're definitely still sitting ahead of the game or very close to it. So what we're going to be looking forward to, I mean, it's been a very interesting time. We've had a lot of interest rate increases, but we've also had record in-migration. This has been one of the policies that's been questioned recently because we barely have enough homes for all the people that we have here, let alone newcomers into the marketplace. And with current financing being where it's at, it's a little unfavorable to build new housing at this point in time. So what's been keeping prices keep going up is this lack of inventory at the price points that buyers in those markets can afford. And there have been buyers in this marketplace. So it's going to be a very interesting fall. Housing policies seem to continue to keep the pin supporting real estate prices. Meanwhile, hopefully we're going to be reaching the end of this inflationary cycle. And my thoughts are inflation might continue to increase over the next little while. It's kind of seems like it's baked in, but I feel like there's going to be a turning point, hopefully in the next year or so. But that doesn't mean decreasing interest rates. That just means a steady eddy of where we are. And then hopefully we'll eventually see some decreasing in interest rates. Anyhow, I'm Christine Kopr with Sotheby's Realty. I welcome any questions that you have. Please reach out to me and please like and subscribe to my channel and let me know what other kind of videos you'd like to see. With that, make it a great day. Take care.